Hello, options trading pilot members. This is Proforma 24. I'm the chief trading pilot. Wow, bloodbath, huh? The Fed, this is what happens when we rely on one entity, right, to dictate what we're going to do as far as the market is concerned. It brings on this volatility just because we are anticipating just different news or just the unknown, right? The unknown causes a lot of fear. And so what we're seeing now, it's like the market, as I'm seeing it, has recovered nicely. It's at 2.56%, but we saw it as low as, I think at least the MNQ hit 13,700s at 1451, 300 point move. So I think it was like 5% down. So just know that we're not out of the woods, but hopefully we'll see a nice update tomorrow before the Fed speaks on Wednesday. Personally, I don't think there's any news that we're going to be discovering. So I do see things going forward. I'm getting a lot of questions about, how is this different from what happened in 2020? Well, in 2020, there was an economic just shutdown. We are not seeing that right now, right? In fact, we're seeing that businesses are doing well. The issue are getting people to come to work. So the slowdown is coming not from that there's no demand, but that there's no way to supply and move those bottlenecks forward, right? So that's one of those things. So today, I just want to kind of give you an idea of what I'm thinking, what I'm looking at, what are the important points. I'm going to talk a little bit on Ethereum. Just because it's tied with the whole crypto market and some Bitcoin. But overall, this is earnings week. Obviously, there's a lot of things happening as far as earnings are concerned. I'm going to avoid playing a lot of earnings this week just because of the crazy volatility. But I may take what I call lotteries, right? So lotteries is just an amount that's way out of the money. For example, those Netflix puts that I thought about purchasing, but I didn't move forward really because I was entrenched in doing so many things that I forgot about the idea of like, hey, we're hitting all-time highs, and this is the first earnings week. There's really a difficult way to move forward to expect more as far as returns. So we should anticipate a nice pullback, and we've seen it. This is a nice pullback. I think we got up to like 10% pullback in some of the markets. Obviously, individual stocks like Moderna, Novavax, they're getting hammered. And what I point to people is that maybe this whole idea of vaccines is over, this forced vaccine, because it's one of those things that the market does speak. The market is telling you that people won't be getting the vaccine, right? Because the valuation of these pharmaceuticals is way down. And I wonder if the powers that be are still holding those positions. I don't know. I haven't checked. I just really doubt it, so I'm just a skeptical person. So at heart, so whenever I see like a company like Moderna come out of nowhere and perform more like a crypto, and then it hits an all-time high of 40.89, and now I think it's at 140 maybe. Let's take a look. 140 mRNA. Yeah, currently at 144. It hit 138 today. So you can see, right, what a downturn. What a huge downturn. But let's get to it real quickly. SPY is down 2.33%. Notice that it broke the 513 very easily. You could have avoided this whole fiasco collapse. You may have, if you would have been, a price action person, you would have seen this rejection here and perhaps gotten in here and enjoyed some of it. But as soon as you see this candle and not crossing that 513 threshold that I really like looking at, you can see, right? Boom, the drop. So we're still seeing that. Now we're seeing a nice rejection here, right? So the question is, can we get to the top of the market structure movement? That it would be really nice to end strong, and then we would anticipate a nice update tomorrow. So anyway, let's get to the Rrd chart that I really like, just to see where we are. I know I like showing this. Let's make sure I'm sharing this screen that I want to share. There it is. As you can see, my cough still like happens, so it's really weird. Like it's just this little dry cough that it hasn't really stopped. So you can see where we are, the leading oil, obviously, semiconductor still, but look how far down it is today, 14.4%. So notice how the leading is really not as strong. A lot of negatives. The only oil index is the one that's really strong. We would anticipate in an inflationary environment, right, that commodities would be doing well. The gold and silver down, right, 8%, which is fascinating to me, right? It's super fascinating how it continues to get pummeled, even though we're getting record inflationary numbers. So as you can see, one of my old favorites is transportation index is down, and it's not really catching up, and it's one of those areas that we would anticipate moving forward fast. So we'll keep an eye out on it. But as you can see, most things are down. We have 1, 2, 3 positives in this whole list. So that says a lot. And if you haven't seen this, let me animate it. This is a stock charts thing that is really cool to see the changing, right, of the leaders and who's leading, who's improving. It helps you with your trading. So it's really, I really like that quite a bit, actually. So let's move on. I'm just going to use the ETHE as a good number. You can see that it started way down and it's inched up, even though it gapped down. So hopefully we capture this gap and it'll continue to find this base here. Let's look at the volume by price that I look at, just to see where the buyers are. You can see right here, there's a lot of selling at this price. If we do gain some steam, it'll pretty easily get back up to up here, these numbers, but there's not enough resistance of people selling. You can see at this price, there's a lot of sellers, right? But above that is just more buyers. So, you know, depending on how you play the cryptos, for me, I'm a long-term perspective person. So has the world changed as a paradigm? I think so, right? I think that we're going to see VR. I think all that metaverse stuff, there's a lot of opportunity there. Just from a business standpoint, right? It just makes sense, right? That you have this store where people buy with virtual reality without coming out of their houses. So everything that supports that should be doing really well. Obviously, there's going to be aches and pains that things grow. Anything that grows goes through a period of pain, right? So that's always a thing. If you believe in pruning to get better fruit, guess what? Then you're pruning the tree, right? Cutting branches off, but what does it give you? It gives you better fruit. So perhaps what we're doing here is getting those things out of the way that just maybe they've been there just for the false support that the Fed has been feeding. And now that the Fed is going to stop doing that, now the real players should come out. And so we should be on the lookout for that. So anyway, long story short, let's look at these earnings plays. Let's see. Just so you know, I recently did a big study. I looked at the last, I think 10 years of the leaders or the components of the SPY, and see which ones are the least volatile that have done really well. And obviously it's like stable companies that don't really attract people, but if you're a long-term investor, they're great. Like Verizon's a great one, PepsiCo is a great one, Duke Energy, those are among my top 10 on the list. And so these are good additions to your portfolio at this point of volatility if you do want to be in the market. If not, then sit back, put in a short-term treasury and just wait to weather the storm and capture the high. If you're a little more aggressive, then take small positions on the shorts, right? Like you can just straight up short the QQQ as interest rates go up, and that QQQ will be challenged. I mean, that's the thing, is that growth companies that depend on a lot of borrowing and for them to grow. And so as the borrowing costs go up, their valuations go down. And since we've been so inflated, then perhaps we're seeing that regression back to where they should be. I'm not saying that the loans are actually expensive. They're actually still low, right? I don't think we've hit 2% on the 10-year treasuries, which is comical, right? Because we have inflation. The numbers they gave us annualized are what, like 7%? I don't believe that. You've seen the gas prices. I think it's way higher than that, actually. So nonetheless, it's one of those things that we have to look at and see the relationship between the bonds, which is, by the way, a bigger market than the equities market, what the bond market is doing, and then the currencies market is doing in its place as well, right? So it's those relationships that are important. That's a much broader topic. That's a very long conversation that can get very confusing. So let's get back to what we see as far as earnings. I just grab a few here. So this afternoon, we're going to see IBM. Let's take a look at IBM. IBM has killed me in the past. I'll be completely candid on earnings. I mean, look at this smooth thing. Probably better to wait out earnings with them, or just play a long put, right? Look at this, or an out of the money put. It's because every time, I think the last 3 times, I'm just guessing by memory or trying to remember, the last 3 times we've seen IBM really take a hit on earnings. And it's interesting because I actually like the company quite a bit. They're just one of those things that, I mean, look at this. If you got into this 513 at 118 and you followed it all the way to this rejection line at 142, by the way, just if you ever see this right there, you should hedge out your position or even get out. Look, it was true here. Now you can argue you saw it here and you got this, right? So it's one of those things that it just bears waiting out what your risk level is. It started down here, went up during the day, and then it bolstered through. So maybe it was just right here trying your patience to see it would drive up, and it could be doing that here, right? But look, dramatic fall. Now we're seeing the market push up really nicely this afternoon, so that's really nice. So let's talk about lottery picks, right? This IBM. Let's switch over to trade IBM. Just so you can follow what I'm thinking, right? Because some people love playing the lottery. I can't say I love playing the lottery, but when it comes to stocks and you've made money for the year, like I'm green for the year, which is kind of amazing, but I've been holding a lot of cash. The only thing I'm not green on is cryptos, but I don't even qualify it as my trading portfolio because that's in another account. I barely look at it. And whenever it hits like significant numbers, I just buy more. So that's one of those things that that's how I play that game. But let's talk about lottery, right? So we get earnings today. Here's IBM. The earliest chain is the 28th. Let's look at what we're seeing here. Look at what we're seeing here, which is how much volume. Obviously, one thing to know is you never want to trade something that has lower than about 200 in open interest. So we wouldn't trade these. But again, we want out of the money puts just because of the environment. You can get out of the money calls. It doesn't matter. But do I anticipate actually a big fall in IBM? I don't. I really don't. And actually, it's shaping to be like we should get a nice update tomorrow. Obviously, the closing is coming at 4 o'clock. And so closing prices, the people that looked at their phones in the morning saw the market go down, they're calling their brokers and be like, get me out, right? So we may see some selling, but big money likes to buy late, and we'll see what the big money does here in the last power hour, right? 3 o'clock, 3:30 or so. And so it's one of those things to look at, but nonetheless, I wouldn't hesitate to take for a 3 delta, $24 risk. You can even go for a $33 risk, 4 delta, or even higher. You can pick any one of these, right? Whatever you feel comfortable with. And if you're wrong, you lose that money. I'm going to tell you. So it's one of those things. Don't go heavy, but if it hits, then you print it, right? So that's the cool thing about that. Just how to think about things. Let's look at another one. I hate betting against Microsoft. It's one of those companies that I really can't stand to bet. I really don't want to. But that's actually a good prospect. And then Tesla, yeah, I'm not gonna get a bet up against them. Let's see. FFIV, I've done that before. That might be a good one, but that's not tomorrow. I'm just looking at the week. LMT, no. That's Lockheed. Yeah, if we go to war, they're going to go up. American Express, RTX, I don't remember what they are. So yeah, let's look at this FFIB. Let's look at this. I just wanted to give you some ideas how you would play these. If instead of going to the supermarket and buying a lottery ticket, you buy one of these, right? So that's basically all we're going for. Here we go. Look, this is kind of nice. Oh, wow. No, look, bid ask. There's nobody, no open interest. So we can do it. Unfortunately, FFIB is a good candidate, but we can't do it. Let's look. 47 inch. Yeah, no good. Let's look at February 18th. Yeah, no good. So we can't actually trade FFIB. I actually think that that's a good candidate to get a really nice downturn. But there's just there's no options to play with it. Yeah, not even on the up or downside. Nobody, the best one is you could probably sell calls over here, but look at his spread. Yeah, you're more apt to lose just on the spread. So we gotta leave it alone. We're gonna pass on that. It looked good to me. X-Links, let's look at X-Links. X-Links. Remember, always think opposite, right? Always, whatever everybody thinks is gonna go up, it'll go down. And whatever. That's how you make the big money. I'm not saying that's what you do all the time. I'm talking about this specific idea of hitting home runs. So if you feel like everything's going to go up, right? Then perhaps you take a short. So, and you might have better insight than I do. Here we go, X-Links. I don't know what people think about X-Links, but 177, yeah, okay. Let's look at the January 28th. Now that's Wednesday. You know, the theta will kill us whatever we do, but looks like the minimum we can go to is right here for 180. 180, that's a $40 spread. I guess I'm okay if you hit like a 200 put on this, and you're still really close. Like the expected move is 22 points, and we're at 177, 155. So it's well within the expected move. It would be nicer if we could get down here, but there's not many calls happening. I guess you can go with it, and you're really okay to lose money. But anyway, lastly, let's take a look at the BTC. BTC. Let's look at this chart. All right. Very interesting. We're really right here at this Fibonacci point at the peak of the volume profile. The MACD, the RSI is down, MACD is going down, but there's a lot of buying that just happened right here. We could be seeing, hopefully, potentially, hitting back up to up here. So that's in the shorter term, what, 36,190, 36,175. So perhaps, we'll see a drive up. And again, with, I don't know if Thinkorswim does Ethereum. There we go. They do that. Okay, 2387. Okay, so more active. There's a rejection happening, it looks like. So hopefully this will remain true and it'll happen. But look how bad the MACD and the RSI look. I think if we don't hold this number, it's really, I think it's like 2,200 or something. If we don't hold that number, once we get below 2,000, we'll hit around 1,750 or so. But look how bad it looks over here. If it gets below here, it just might go. This is the last hold, right? 1971. I really don't think it'll get there, but like here. Okay. So I hope that helps. I just want to be positive here. Like these corrections happen often. It should have been anticipated. We have priced in the federal pulling the money out. Just as a brief lesson, how the market goes up is it needs to have new money coming in, right? Some of that new money is people working and they have the automatic buys into the market. They do the SPY. Hey, I want to do 60% of my money SPY, 40% in bonds, and then that money goes goes in, the money managers have to go in and buy the stocks that make up the component that will fit the index, right? And so 401k money, then foreign money, money from the outside coming in. We call it new money. It's not new money for them probably, because we're one of the few countries that actually creates wealth. So what we used to have this other slice, right? That was like about $30 billion a month that the Fed was buying, and that's $360 billion a year, right? So that's a big chunk that's going into the market. So that is essentially has been removed. And so I haven't looked to see what the demographic or the breakdown of new money looks like historically. So what we would say as of right now, we need to find something that's going to replace the money that the Fed has removed, or we might be at the price that will stay here, and then the wealth creation will catch up and drive the markets up. So and remember, that's that last infrastructure bill that passed, that isn't a one-time thing. That's a continual feeding. That's a slow burn that'll continue to feed into it. And so the question is, what percentage of that amount has gone in there, but into the markets? So anyway, stay positive. Things will be fine. The only thing we don't want to do is have the permanent loss of capital. Just think of it as temporary if you're down, and then it's just, don't worry about it. It's just money, right? All right, guys. It's a little long, but I'm talking a little bit, so here we go. You guys have a great day. Visit us, like us, optionstradingpilot.com, and come visit our Discord. All right, guys.